Hello everyone, welcome to the Ichimoku charts.com hourly analysis for the SP 500 for Monday, November the 1st, 2010. Well, the market began trading the day with a very bullish candle, a very large green body candle, and it began a first time frame uptrend. The market in that first hour broke out through the top of the cloud, and that was a bullish signal in Ichimoku charts terms. The cloud previously, on the previous day's trading, was acting as an area of resistance to the upside and support down below for this market. The market was trading in a range for that previous day, and the market had trouble breaking out above the cloud. We can see how the market tested the top of the cloud but failed to close up above there. Today, we break out with a very bullish candle. Now, for this breakout, though, that the extent of the first time frame uptrend was limited by the strong overhead resistance. We had previously noted this area of resistance around 1192, and when the market attempted to trade up there previously, on a couple of occasions the market sold off. Once again, the market tested that region and failed to follow through. We can see here that the zone of resistance extends up to around 1196 to this swing high. And we can see this candle with the long shadow on the top and the small body where there was very strong downside rejection. In the second hour of trading, the bears taking control of this market and the bulls losing commitment. Very much different than the previous hour's candle. Following that candle, we had a change of trend to the downside in the third hour of trading. We had a larger red body candle and a candle with a lower high and a lower low. The market in that third hour tested the area around the Tenkan-sen. That's the Ichimoku indicators that represents the trending action in the fast-term time frame. And the market oscillated around that level, attempting to trade out and then trade down through with little success. In the second last hour of trading, however, the downtrend continued on, and we had quite a bearish candle with the market testing the area at the top of the candle and closing just within, testing the area at the top of the cloud and closing just within the top of the cloud. Last hour of trading, though, we had the market continuing to sell off with the first time frame downtrend, a lower high and a lower low. But we had quite the opposite to the type of trading we had at the extreme high for the day, where the sellers lost commitment. We can see the very long shadow on the bottom of this candle with the small green body. Now that denotes the sellers losing commitment, and the buyers came in force as the market traded down to the bottom of the cloud. And the cloud, once again, has acted as an area of support for this market. There's a strong possibility that the market may change trend to the upside. We've had the breakout up above the cloud once again. Not a terribly bullish breakout because the market is still in a first time frame downtrend, so the trend hasn't changed yet. But on the in that last hour, the buyers did take control of the market by closing the market up towards the high, and we can confidently say from the very large shadow on the bottom that the bears substantially lost commitment to taking this market lower. Now, with the market trading up above the cloud in that final hour, it means that the market has an overall bullish bias in the big picture terms on these hourly charts. And the market is trading just above the Kijun-sen, which means that the market technically is bullish in the medium-term time frame. But really, the market has only just closed up above there. So you'd have to say that the market is neutral in the medium-term time frame. The market is, however, trading down below the Tenkan-sen, which means that the market is still bearish in the fast-term time frame. Just looking at the type of candle that we've had in this last hour of trading, we also have a setup for a harami pattern. And that's where the body of the current candle is within the body of the previous candle. So there is potential for a change of trend because of that. And that's basically because previously we had the large red-bodied candle, we had the bears in control and showing good strong commitment and making good net bearish progress. And then all of a sudden that's evaporated in the final hour of trading. The bulls have taken control. but the amount of net bearish progress is not there. At the opposite has happened. The bulls have actually made net bullish progress, although a very small amount. So that's set this market up for change of trend in that first hour of trading when the market opens tomorrow morning. So the high of the current candle becomes very, very important for a potential higher high and higher low, a change of trend to the upside. Potential resistance, obviously the market will need to trade through the Kijun-sen, which we've seen previously will hold as an area of support or resistance. And incidentally, the Kijun-sen turned flat early in the day, and the price action was attracted back towards that. It's quite a good probability that will happen when the Kijun-sen turns flat. There is very strong resistance all the way up from this area if the market does change trend and trade up to the upside, not only at the Tenkan-sen, but all the way up through this zone to 1192 and up to the swing highs here at around 1196. So very, very strong resistance overhead. To the downside, though, we do still have strong support. And the support is all the way through the cloud from roughly 1182 down to 1178. And we can see here on a few occasions that level has held as support. Down below there, we also have support extending down to around 1173 and just beyond with these swing lows, which were down around 1171. So good strong support down below. And we can see that in a bigger picture time frame, the market has been trading within quite a range. And the range extends now from 1196 down to around 1171 or so. So they're pretty big levels for this market. To see the market appreciate, we would need to see a breakout up above that level, around 1196, and to the downside, a breakout down below the 1171. But there is also further strong support in rather large zones down below that region as well. So certainly the high of the current candle for that final hour of trading becomes very important, and that high was at roughly 1184. And the low is also important. The low was at 1177.